We're always asking clients to send us copies of their tax return. So I want to record a quick video explaining what we do once we get the tax return and how we break down. So first, we have a tool called HolistiPlan. We import the tax return, and then from there, it breaks it down into its individual components. So we're looking at here is a summary report we might see. This is sample data. So again, you might get some funky numbers, but what we're looking at here is total income, AGI, the deductions taken, the taxable income from the year, and the total tax paid. In this column over here, we're looking at the filing status, the marginal rate, the average rate. And if we go over here, it'll show us things like qualified versus ordinary dividends, the carried forward losses, how much Social Security was received versus how much of that was taxable. All these different things are hugely important when we're doing financial planning because as we pull levers on the investment side of things, we need to make sure that we understand how those will flow through to the tax return. So for example, this report must show us what is our marginal bracket and importantly, how much room do we have till we get to the next one? And it'll also show us what is our marginal rate on capital gains. Importantly, if we're in the 0% capital gains rate, we may not want to be harvesting losses, but instead harvesting gains. The only way for us to know that is to look at the nuances of the tax return. Same thing as we get into Medicare premiums. Medicare, these are not marginal brackets. As soon as we step a penny over into the next one, our Medicare premiums go up. So we want to make sure that any solutions that we propose do not have unintended consequences. So that is the report and how it breaks down. But then you also have the what if scenarios. What if you're thinking about cutting back on your work and therefore your hours are going to be diminished? Or what happens if you import or you implement a Roth conversion strategy? Or what if you have more dividend income next year? Or what if you sell a house? Or what if they change the tax rules? What if these tax provisions sunset? We can play with all of those different things in this scenario builder. Again, it's just important that we get the copy of the tax return. And from there, we can adjust all the different factors to make sure that what we're doing is in line with what you should be doing, what your CPA recommends, etc. So again, this is how we use the tax return. If you have questions about this or anything else, just let us know.